I don't know if it's too late in January to say Happy New Year anymore, but Happy New Year, our first newsletter of the year. That's out the window. So, real estate outlook for 2026. So let me grab my crystal ball. And this is the only thing I have that's a crystal ball. And this is about as clear as my crystal ball is going to get. So, big question out there right now, interest rates. What's going to happen to interest rates? So, according to Fannie Mae, according to MBA, which is the Mortgage Bank Association, according to the NAR, the National Association of Realtors, Wells Fargo, Zillow, and Bankrate, they are all saying that the interest rate will not get below 6%, may even get a little bit higher, but they don't see it coming below 6%. So, and of course, refi rates are going to be higher than that 6%. But an interesting little tidbit, for the first time in quite a few years, the number of mortgages that are above 6% are more than the number of mortgages that are below 3%. And the reason that this is interesting is because the stagnation in the market, a lot of people were just holding on to those really, really good interest rates, and they weren't selling or buying anything because of those really good interest rates. Well, now that the majority of interest rates are above 6, we're going to see a little bit of movement. We're going to see people who are a little more willing to buy and or sell, because that bunch that were the 3% are actually being eliminated at this point. So what does this mean for the buyer and seller? Well, for the buyer, it means more inventory, which means they're not going to have such a difficult time trying to find something that they want, and they're not going to lose out, to multiple bidding. For the seller, what it means is there's more competition. So your house has to be priced right. Your house has to be ready to sell. Your house has to be looking its finest. It has to be marketed well. And you have to be probably in 2026 a little more open to negotiation than what sellers have been in the past. So those are just a couple of things as we move into 2026. But this is a very balanced market, which is good. It's not a buyer's market. It's not a seller's market. It's a very balanced market. As far as commercial real estate, investors are still wary. They're wary of potential impacts from federal policies, from tariffs, interest rate volatility. So commercial real estate is still a little wonky. Nobody predicts housing prices to crash. They think that they will continue to 1%. 2%, 3%, 4%. They don't see anything necessarily crashing. They see prices stabilizing and a continued demand for move-in ready homes. So these are homes that have been updated. There's probably going to be more of an interest in something that's already updated as we move forward. But once again, whether you're buying or whether you're selling, that I am going to advocate for you to use an experienced real estate agent, especially one who is good with negotiation, because negotiation is going to be probably a little more in the limelight in 2026. But just remember, a good real estate agent provides you with the data, the knowledge, the objectivity, the network, the skills necessary to sell your home for more with the least amount of hassle on your part. So here's to 2026, and let me know if I can help you.